This is Stephen Story with Tips on Trading. I would like to talk about a trading strategy that I've been able to develop over the years that actually started out with a fairly basic introduction to carry trading, okay? I have a lot of people that contact me and they hear me talk on my Tips on Trading videos about the optimized carry trade strategy, and they want to know more about what that is and what that means. So I thought I'd better produce a little video here to help answer some of those questions. And I think this will do a lot of good for people out here just generally, because I've learned that the carry trade strategy is probably one of the most powerful examples of a great strategy that people overlook all the time. And the reason for it is because they think carry trade strategies are just simply for earning interest on the money you're trading in the market. Well, let me take you back to my beginnings, where I was introduced to this. It's been a few years ago, and I was introduced to a company called Freedom Rocks, and they have a really nice set of software that helps a person calculate a carry trade. I didn't understand what a carry trade was. They don't even call it a carry trade necessarily there with that company. But the software is great. It helped me to calculate everything, enter my trades simply. And the general idea with a carry trade is that you can enter a naturally hedged, negatively correlated pair of currencies or basket of currencies that generally trend in opposite directions and create a natural hedge. That protects your account so you don't have to have stops. And it designs it such that while one currency is running in the negative and the other one is going in the positive, the balance there allows you to ride through lots of different swings in the market so that you can earn interest and just leave your trade in the market. Well, that sounds wonderful, and I think there's a lot of people out there who might be satisfied with just making an extra 100% on their money a year or something like that. But I found with time that the carry trade had a major drawback. Now, I got involved with it because I saw many months of net profit gains without a single net loss with trade reports I was looking at. And then I tested it myself and had the same results in my own demo accounts. So when I found those results, I thought, this is great, I'm going to try this and jump in. So I started with a live account about $15,000 just to get off the ground and play with it for a while. Well, it was doing great, just like it was in my demo account, just like the trade reports and the results I'd seen from others that introduced me to it with Freedom Rocks. And it was going great. The accounts were growing exactly the way I did it in my demo account. No emotions. It was just doing it almost automated. All I had to do was wait and watch and earn interest every day. Well, then I got to what I think I've mentioned in one of my other videos, what we call the Black Sabbath Sunday, okay, where all of a sudden everybody trading that carry trade learned the major drawback. And that was when you run into a time in the market where the currencies no longer in your carry trade basket are moving opposite directions of each other, and you lose the natural hedge. You lose your security. And then they trend in similar directions, in the same direction together, and they sell off when you're in buy positions. If you're in buy positions, you're earning interest. That's why you want to be in buy positions all the time. But when both those currencies decide to sell off together and they're no longer negatively correlated, all of a sudden you're at risk of possible margin call if those two sell off deep enough and far enough that it draws your account down enough to experience a margin call. Well, Black Sabbath, on that particular Sunday, it finally happened, and I think there was quite a large number of people that got margin calls who were carry trading. It's called a carry trade liquidation. That's what it happens. It liquidates the carry traders. Well, I went through that experience, and it really wasn't very pleasant at the time because I became disillusioned all of a sudden about the carry trade. But now that I look back on it, with what I've been able to develop because of that experience, I look back with gratitude. That became an experience that motivated me to dramatically improve the power of the carry trade and still take advantage of its very strong points, okay? I like earning interest, but because of that, I also learned what I had to do to avoid the serious drawdowns so that I didn't have to get trapped in those drawdowns. And therefore, I didn't have to worry about the carry trade liquidation anymore. I also learned how to do cash grabs periodically, which meant I could pick up $100 here, not just interest, $500 there, $1,600 over here, depending on the volatility of the market and what's happening there, and that's still with the carry trade. Then I learned also that as I'm sitting in that carry trade, I've accomplished something else. One of the major weaknesses that I have had with trading is impatience. Now, I went through the phase that I think a lot of traders go through, where they just have to have a trade in the market. It's almost like a drug to them. They want to be trading all the time. They don't like to be sitting, waiting, watching so much for that ideal opportunity. Impatience causes them to enter their trades in the market too soon, or to compromise on the high probability for a lesser probability trade, or to enter them too late because they feel like they're losing the opportunity and they're just impatient and they don't want to wait for the next opportunity. Well, I found that when I had my carry trades in the market, it was kind of like, well, you've been in the hospital maybe, or seen someone in the hospital when they're on the drip, you know, they got a morphine drip going, and you can just kind of press the button and give yourself a little more morphine, and all of a sudden, man, things are great, you know, I feel good. Well, carry trading is kind of like that. It hedges your emotions. It hedges your impatience because you've got to trade in the market. It's earning you money and interest, and it's also giving you cash grabbing opportunities periodically where you can grab a net profit. You might do that 2 or 3 or 4 times a week for $100, $500, $1,000. There's all different ranges of possibilities depending on the volatility in the market. It's kind of like clicking on the drip button, you know. It's satisfying my impatience, it's giving me profit, and here's the next level of optimization. This is really great, because while you're watching your carry trade for cash grab opportunities and you're earning interest, you're also simultaneously watching the market progress. It's trending upward, it's moving along, and you're watching for the time when you want to exit those carry trades so you can now optimize it further by avoiding the major drawdowns. But while you're watching it, all of a sudden you get these little epiphanies that go off. Boom, there's a buy sell. Oh man, that's the one I was waiting for last week and I missed it because I was impatient. Now you hit that buy sell or buy trade and you pick up a profit that's $2,000 maybe, you know, and it's much more profitable than your typical cash grab, but you got it because you were patient. You weren't too anxious. You weren't entering at the wrong time, and the carry trade made it possible to do that. The same thing happens in a sell. When your market hits the peak and all of your indicators triangulate together to confirm, yep, I look like I'm at the top of the market here. Now it's time to pull my carry trade out. Well, duh. The next thing that dawns on you is, oh, I'm at the top of the market. It's about to sell off. So now you take a sell trade and you watch these things happen in front of you because you're not too impatient to get in at the wrong time. The carry trade can be optimized about 5 different levels. There's another one that helps you when you close a carry trade to let your negative trade recede back up if you know where it is in the market, and then you create an even greater net profit. This is a powerful, powerful trade. It's a strategy that just gives you tons of options. It allows your eyes to focus on something that satisfies the fix for the drug you need. You know, if you're that kind of person that just got to have a trade in the market, this is perfect, okay? You want to do this. Get on the drip, guys. Get on the carry trade and learn how to optimize it. There's 4 or 5 levels of optimization that will just make you an incredibly balanced, well-rounded trader and open up your options. That's Tips on Trading. This is Steven Story.